Hey everyone, C3.ai reported fiscal year 2023 fourth quarter earnings results. So in this video, I was going to provide you an analysis of its latest earnings results. I was also going to update my recommendation on C3.ai stock. Heading into this announcement, I had C3.ai stock as not a buy. I had the stock as don't buy it. And going into these earnings, I will update the recommendation after the end of the video. So let's get right into it. Revenue increased slightly to 56.9 million. That was up from 56.3 million in the same quarter last year. The net loss worsened to 65 million, up from a loss of 58 million year over year. So revenue stayed roughly flat, but they just lost 7 more million on the bottom line, and that was despite earning $8.2 million in interest income compared to 750,000 of interest income in the same quarter last year. So if you take out that 8 million extra that they earned, or let's say 7 million extra that they earned, the net loss would have been 72 million on the bottom line, even though revenue stayed flat. I don't like to see those kinds of results where you're just losing more money and it's not even resulting in more revenue. In the fourth quarter, the company did close 43 agreements, including 19 pilots. Remember, pilots are trial periods the company holds with companies in the hopes of closing or turning those into contracts for sales. And the company did mention some big deals that are in the pipeline that they might close. Although if you look at their forecast, it doesn't look like they're very optimistic on that, and I'll talk a little bit more about that later. So in the fourth quarter, C3.ai finally released its highly anticipated generative AI solution for enterprises. That was looked forward to by a lot of investors and a lot of analysts as a potential catalyst to boost C3.ai higher. However, if you look at the forecast for 2024, it doesn't look like this new product is generating a great deal of interest, and I'll show you why here. So, C3.ai is forecasting 2024 fiscal year revenue of between 295 million and 320 million. That would be a slight increase from 267 million of revenue it delivered in fiscal year 2023. So let's say roughly 10 to 15% revenue growth expected for the next fiscal year. Now, 10 to 15% revenue growth is a modest figure considering you just launched this product that was supposed to be highly anticipated, and it's been very hyped up by the company's management and those that have been bullish on C3.ai stock. So if the product is so revolutionary and so highly anticipated and so highly desired, how come it's only adding an incremental 10 to 15% to the company's revenue in the next year? To make matters worse, it's not improving the company's profit prospects either. The company still expects to lose money on the bottom line next year. So, an overall underwhelming quarter from C3.ai, in my opinion. I had the stock rated as not a buy going into these results. I didn't see anything that would cause me to upgrade my recommendation for C3.ai stock. In fact, after these quarters results, I'm closer to recommending the stock as a sell instead of a hold. The company's stock value has soared recently due to all of the hype around the company with little to show for it, as you could see in these results here. What numbers in these results justify a stock price increase, right, in the magnitude that the stock price has increased? It's just a lot of hype and anticipation, which I try to stay away from. I view that as highly speculative and very risky. That's not my investing style. It might be right for some investors. It's not right for me. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.